Okay, good morning, everyone. Looking at the US stock markets, the Dow has again rallied towards the recent peak of around the 26,200 points level. Since then, we are also seeing the uptrend in down rotation being re-established again. The MA20s above 60 and also the 120 has been in line. However, we did not see any follow-through by interest beyond the 26,200 points, and instead, the Dow has seen a continuous sliding over the past five trading days below the EMA 20 level as well. So for now, we might be seeing further weakness on the Dow Jones towards the 25,000 psychological level to sell your holds there. If we can find some support along the 25,000 level, then we might see further recovery back towards the 26,000 or even back towards the previous peak of 26,250 points. In the meantime, the support will be located towards the 25,000 psychological level on the Dow Jones Index. Likewise, the broader market was traded in a similar manner as the S&P 500 has earlier on recovered from the recent low of around the 2350 towards the recent peak of around the 2820 level. Since then, we did see the S&P 500 has staged a pullback alongside with the Dow Jones towards below the 2800 and also the EMA 20 level as well. On the S&P 500 right now, let's monitor to see how the S&P 500 holds along the 2700 psychological level. If we can find some support level along there, then this could be the longer term breakout, the pullback, and the continuation pattern on the S&P 500. Firstly, to retest the 2800 or even towards the previous peak of the 2815 level. In the meantime, the 2700 will serve as the immediate support level on the S&P 500. The weakness on the US stock markets was mainly on last Friday was mainly stemmed by the weaker than expected jobs data. So based on the crude prices continue to linger on a sideways manner after the recovery on top of the 42.50. Since then, we did see a first wave of a consolidation between the 50 towards the 55. Subsequently, we did see the 55 level broken as the crude prices retested the EMA 120 level, but it rejected along the EMA 120 level over the past couple of weeks. For now, let's monitor for the next consolidation band to sell the crude prices holds. If the crude prices were to breach above the 57 or 58, then we might see further recovery back towards the 60 or even towards the 63 US dollars per barrel level. In the meantime, the 55 will serve as the immediate support level on the crude prices right now. All in all, the crude prices is forming the higher high and also the higher low formation, suggesting that the uptrend or the recovery is still intact at current juncture. Okay, some updates on our local front. The FMKLCI has been hovering between the 1665 towards the 1700 psychological level earlier on. With the breakout above the 1700, we did see the FMKLCI has advanced towards the 1730 level. It rejected the 1730 level before trending lower. It violates below the 1700 psychological level as well, and the fall-through selling pressure was noted on the FMKLCI. The FMKLCI continues to tank lower as well on last Friday in tandem with the weakness across the region amid the weak China trade data. For now, tracking the weakness on the Wall Street and also some minor pullback on the crude prices, coupled with the extended selling pressure from selling from the foreign funds, we might see the FMKLCI to continue to tank towards this previous support, which is located towards the 1665 to sell your holds there. Until we can find some support along there, then you can confirm for the next direction on the FMKLCI. But if the 1665 level fails to hold, then we might see further retracement on the FMKLCI back towards the 1630 level. All in all, earlier we did mention that the FMKLCI has really indicated a sell signal after the violation below the 1700. The RSI has also tripped below the 50 level as well. If we look at the weekly chart, We did see the FMKLCI has staged a 1 week of a recovery, but the did not see any follow through recovery on the next week itself, as the FMKLCI has rejected the EMA 120 level on the weekly chart. And the next week itself, we did see another gap down formation. For now, we might be seeing further weakness on the FMKLCI over the near term period. Already, if you look at the weekly MACD histogram, it's actually turned red, whereas the RSI is approaching towards the below the 50 level as well. So sentiment appears to be quite negative at our current juncture. But it is the different case on the FM small cap index. The low liners continues to march higher after forming the breakout towards the 13,000 psychological level, a healthy pullback just towards the EMA 60 level, and this is a continuation pattern being established as the FM small cap index continue to see rotational play back towards and is looking to retest towards the 13,000 psychological level. So for now, should the 13,000 level were to be breached, then we could be expecting the MACD indicator to issue the buy signal. RSI could be solidify its position above the 50 level as well. On stocks wise, some of the stocks that we can watch out for firstly would be Josh Ken. Josh Ken has earlier found some support along the 75.5 cents level. Since then, price has formed the bullish engulfing candle before staging a strong recovery. It rejected the EMA 120 level, but recently, after the recent pullback just towards the EMA 60 level, we are seeing another good bullish candle was being formed on Josh Ken, accompanied by some of the climatic volumes being traded on last Friday as price closed above the EMA 120 level. Subsequently, price attempts to break above the 121 as well, but it did not close above that. For now, let's monitor for the breakout above the 121. Should price manage to breach above the 121 level, we could be seeing further upside on Josh Ken, firstly towards the 133, subsequently towards the 1 ringgit and 41 cents level. Stop loss will be located below the recent low, which is currently located at the 1 ringgit and 11 cents, and the final defense is located below the 1 ringgit and 5 cents level on Josh Ken. Should price manage to see follow through buy interest today, we could expect the MACD indicator to issue buy signal. The RSI could be trading higher as well. On BP Plastic, price has been on this forming the stepping up formation, forming the higher high and also the higher low formation from the recent low of around the 22 cents. We are seeing price has made a very strong rally or gap up, subsequently pull back and traded sideways without significant volumes. Once again, rallied, pull back without significant volumes, rallied, pull back without significant volumes, and again a rally. So this is the stepping up formation that we are seeing. Price has already formed the flag formation or breakout on last Friday, accompanied by some of the improvement in volumes. But before that, we are also seeing the uptrend intact orientation formation being re-established. The DMA 9, 20, 60, and 120 has been in line since then. On last Friday, with the breakout above the 1 ringgit and 11 cents flag formation, we could expect the price to head higher towards the 116 or even towards the 1 ringgit and 21 cents level. Stop loss will be located below the recent low, which is currently located at the 1 ringgit and 6 cents level on BP Plastic. On UG Tech, price has begun retraced from the recent high of 3 ringgit and 36 cents level. Price made a very sharp retracement towards the 236. It formed a dodgy candle. Subsequently, price managed to recover, forming the short-term higher high and also the higher low formation towards the recent high of the 285. On last Friday, we did see price attempts to reach above the 285 level after forming a bullish candle. For now, let's monitor for the breakout above the 285 level, and as price has seen some of the recovery trend accompanied by some of the improvement in volumes. Should price manage to breach above the 285, we could expect price to see further recovery back towards the 3 ringgit and 5 cents or even towards the 314. Stop loss below the last Friday's low of 2 ringgit and 69 cents level on UG Tech. With the bullish candle being formed on last Friday, we are seeing the MACD histogram has returned green. RSI has also recovered back above the 50 level as well. Last two company for the day, firstly will be IGM. IGM has again recovered from the recent low of around the 1.51 a level. Since then, price has managed to creep higher towards the recent peak alongside with the recovery on the construction sector. Price has currently staged a healthy pullback just towards the EMA 60 levels. This could be taken as the longer term breakout, pullback, and the continuation pattern that we're going to monitor for the breakout above the 2 ringgit psychological level. Should price manage to breach above the 2 ringgit psychological level, we might be seeing further recovery on IGM towards the first target price at the 2 ringgit and 20 cents level, or even towards the 2 ringgit and 49 cents or 250. So the first target price is at 220 towards the 250. Stop loss can be trailed towards the EMA 20, which is currently located at the 1 ringgit and 87 cents level on IGM. Should price manage to breach above the 2 ringgit psychological level, we could expect the uptrend inter-orientation formation to be re-established again as well. Last company for the day will be GSB. GSB has been on a sharp pullback phase after the price hitting the intraday high of 225.5 cents level. Since then, price has retraced towards the 13.5 cents level, forming a base with the base formation toward along the 13.5 cents level. We did see a bullish divergence signal was being formed as price has been trading lower, but the MACD indicator has been forming the higher low formation since then. With that, we are seeing price has managed to form the breakout above the 16.5 cents level. As subsequently, price continues to maintain its stance above the 16.5 cents, heading towards the intraday high of 21.5 cents. With this bullish candle hitting the 21.5 cents level, we did not see any fall through my interest, and instead, price has staged a healthy pullback. The pullback is considered healthy because during the rally phase, we did see some of the very high volumes being traded, but during the pullback phase, we did not see much of the selling pressure. So this could be the breakout, and this could be the potential flag formation that we're expecting, that we're going to monitor for this breakout above the 19.5 cents level. Should price manage to breach above the 19.5 cents level over the next coming days, we could expect this flag formation to see the price trading towards the 21.5 cents. That will be the first target price for now, followed by the 22.5 cents level. Stop loss will be located towards the recent breakout formation above the 17.5 cents level on GSP. If you have any questions, you can put in the chat box. I'll reply you shortly. There's some question here firstly on Dialog. Dialog Group has again recovered from the recent low of around the 2 ringgit and 73 cents level. It formed a double bottom formation along that, and subsequently price has recovered towards the recent peak of 3 ringgit and 34 cents level before trading on a sideways manner. On Dialog right now, let's monitor for these two bands, the 3 ringgit and 12 cents towards the 334. Should price manage to find some support and rebound back towards the 334, then we might be seeing further upside on the Dialog back towards the 344, or even back towards the previous peak of 366 level. Stop loss below the 3 ringgit and 12 cents at current juncture for Dialog. But things appears to be slightly negative on Dialog right now. As you can see that the MACD indicator has really showed a sell signal early on. RSI has also tripped from the overbought position as looking to off, and it's really tripping below the 50 level. So the indicators suggesting that it's slightly on a weakening phase, but let's monitor for this 3 ringgit and 12 cents. But if we zoom in closer, if price managed to breach above the 3 ringgit and 22 cents and close above that, then there's a higher chance that price might recover back towards the 334 or even back towards the 344 level. But for now, we might be just seeing a sideways consolidation on Dialog. On Dayang, price has continues to trend sharply higher. On Dayang right now, if you're holding on to this position, you can continue to hold on as long as price is still above the daily EMA9, the trading stop loss point. We did see price rallied, pull back or traded sideways to just towards the EMA9. Once again, gap up and just traded a sideways manner just towards the EMA9 level. So we can use the daily EMA9, which is currently located at the 1.20 level, as your trading stop loss point on Dayang. On Dayang right now, the next target price will be located towards the 1 ringgit and 91 cents level on Dayang. So you can just continue to trail your profit until it falls below the 128. Then you have to take profit or cut loss immediately. And let's zoom into the 30 minutes chart. The other candles are not appearing, but on the daily chart, you just have to use the daily EMA9 as your trading stop loss for now. Okay, okay, okay. On Dayang right now, the Dayang has been on the 30 minutes chart. We are seeing the very sharp uptrend interpretation formation being established, but we are cautioning that there could be a bearish divergence signal at current juncture as price has been trading forming the higher high formation on the 30 minutes chart, but the MACD indicator has been forming the higher low formation, implying that at current moment price is likely to peak and price will likely to retrace over the near term period. So gains will likely to be limited at current juncture, while we will be seeing some of the pullback phase coming over the near term period on Dayang. On Denko, price has formed a very sharp uptrend interpretation formation after the breakout above the 49 cents level. Since then, price has formed the breakout pullback just towards the EMA 20 or towards the 49 cents, and the continuation pattern was being established, accompanied by some of the very high volumes being traded on Denko. For Denko right now, we will be seeing further recovery on Denko with the next resistance at the 64.5 cents level on Denko. That will be the next resistance for now. Your stop loss point can be trailed towards the EMA 120, EMA 20, which is located towards the 53 cents level, which is also the previous breakout point. If you have any questions, you can. If you have further questions, you can put in the chat box. If there's no further question for today, then we'll end the morning briefing. Thank you.